Welcome to the Nadex Application and Strategy webinar series presented by Daryl Martin from apexinvesting.com. So today we're going to talk about how price moves on Nadex binaries and how you can use the binary price ladder to help you set take profit orders. One of the most important things you can do when trading binaries is always insert an advanced take profit order. And so what you'll do is you'll go in on an open position, you'll simply click on the green arrow on a buy or a sell. If it's a buy, it'll open a sell order for you. You can adjust the quantity if you want to, but you definitely want to adjust the price for your take profit price and hit place order. And then of course on a sell order, it'll open a buy order for you. You'll adjust the price and you'll hit place order. And that's all you have to do to set an advanced take profit order. With that being said, how do you know what price to set it at? And that's what we're going to talk about today. And what we're going to do is we're going to go through several examples, and we're going to look at the daily Euro USD Nadex binaries. So the Euro USD Nadex binaries, they follow the spot FX for Euro dollar, not the futures FX. And right now, as of this example, the Euro dollar is trading at 1.2928 at 9:45 p.m. Eastern Time. And this is November 2nd, 2012. The expiration of these binaries is 3 o'clock Eastern Time on Friday. And all of the strikes are 20 pips wide. And you can use the price ladder as a gauge to see how binary price will be impacted by a move in the underlying market. Now the price ladder will show you this absent of time, and we'll talk about how time affects binaries as well after we go over these examples on reading the price ladder. Alright, so what I've done here is I basically recreated the Nadex price ladder. And what you do is you see the price ladder just simply means all the different strikes that you see right here. So you can see 3140, 3120, 3100, they're all 20 pips apart. Okay? And over here you see the bid and offer. So you're used to seeing that, right? And then what we did is I put, if you held it to expiration, what is the risk and what is the reward on the trade? If you sold it versus if you bought it. But let's go ahead and take it a step further and go, what would happen if the euro dollar moved one strike? And remember, every strike is 20 pips wide. So let's go ahead and look at this and just basically put the example together. So what we can see right here is that if we went in and we bought this binary and the euro dollar moved up one strike, we'd make $1 or a 25% return. How do we use the binary price ladder to figure this out? Well, what we do is we take the bid column over here and we basically move it up a strike. So if I bought it 4 and it moved up 20 pips, I'd be able to sell it 5. Again, this is absent of time in all these examples. But I'd buy it 4, be able to sell it 5. If I bought this binary, I'd be able to buy it 8 and sell it 11. If I went in and bought this binary, I'd be able to buy it $70.50 and sell it $70.55. And this is important because by looking at this, you can actually find which binary has the best reward to risk ratio. And so I can look over here and I can see that this one gives 25, this one gives 37.5, this one gives 34.5. So if I expect there to be a one strike move in a short time frame, then this binary right here actually provides me with the best return on my trade, because I can buy it for 8 and sell it for 11 and give me a 37% return on my investment in a one strike move, which is more than any of the other binary strikes on the buy side. Now if I flip over and I go to the sell side, now on the sell side what you'll see is I could go in here and I could sell this binary for $92.50 and I could buy it back at a lower price at $91.50. And all I did on that was I simply moved the offer down one strike, or you could say I just went up a strike on the offer side from the sell side there to know where I'd be able to sell it at if it moved 20 pips, again, absent of time. And this, again, is very helpful because I can see on this one right here I could make 20% on this binary if I sold it at 83 and bought it back at a lower price at $79.50. And this will help you find the best binary for a move if you think the move is going to happen in a short period of time. Now, if I think the underlying is going to move 2 strikes or 40 pips based on my analysis, my deviation levels, and different things like that that I may look at to trade with, then I could go over here and I would do the exact same thing. It's just I would actually move the offer down 2 strikes. And so I could see if I went in on this trade right here and I sold this binary at 95, I could buy it back, or I could go up 2 strikes over here. So I could buy it back at 91.50 because this price would actually be down here. And I can look over here and I can see that the best return is actually on this binary, an 80% return. If I went in and I sold this binary at 92.50 and it'll sell it back at 86.50. And that results in a $6 profit on a $7.50 risk. And likewise, if I bought the binary, then I'd move the bid up 2 strikes. And so what I can do is I can see that if I went in and I bought this binary for $4, I could sell it for 11, or I could go down 2 strikes over here on the bid, however you want to do that. I could also buy this one for $14.50 and sell this one for $30.50. And by doing this, you can see that this binary right here, if I think that the market's going to move 40 pips in a short period of time, I could actually go in and make a 175% return by buying a $4 binary and selling it at 7. Just think of what is the total return on the trade if it were to move that far in a short period of time. Now, if we thought the market was going to move at 60 pips or 3 strikes, we'd simply go in and do the same thing, except for we'd move the bid up 3 times from where it's currently at. So if I went in and I bought this binary for $4, I could then sell it and I'd go 1, 2, 3 for $19.50. And that would return a yield of 387% on my $4 risk trade. So you can see, really understanding this can help you find the best one, because the one above it's 340, the one below it's 281, the one below that's 189, the one below that's 131. So you can see a much higher yield on your trade if you're accurate, and you go in and you buy this one at 4 and sell it at 19.50, and so you could set your take profit order at 19.50. Now, if I thought the market was going to move down 3 strikes or down 60 pips, then I could go in and I could look at the offer and move it down 3 times. And go over here and look, okay, so what if I sold this binary right here at 92.50, and I could buy it back 1, 2, 3 strikes right there, because if it moved down 3, this is where this price would be at 79.50 there. And that would give me a yield of 173%. Versus 156% on this binary, or 138% on this binary. So knowing which binary has the greatest yield and knowing how to read the price level is very helpful, because I can go in and I can sell it at 92.50 and I can put a take profit order in at 79. So it lets me know the price, and I can compare the difference to look at the yield on the binaries. Alright, so let's do one more example. And what if we thought the Eurodollar was going to move, say, 80 pips or 4 strikes, such as when a Eurodollar interest rate announcement comes out different than expected. And so we'd go in there, and if we were going to buy, we would move up the bid price 4 times for 4 strikes. And so if we went in and we were looking at the different binaries on here, we could see, well, if we bought this binary for $2.50, we went 1, 2, 3, 4. So this one sold for $19.50. This would be at this price. If it moved up 80 pips pretty fast there, then we would be able to make a 680% return on that trade, a $17 profit. And so not only, again, you need to know what is the exit price if it does move that far. So you know that's $19.50. That's where you can set your take profit order. But also, just knowing what the yield is allows you to find the best binary available for the trade and the expected move that you think is going to happen in a short period of time. And then on the flip side, if I thought the market was going to move down, then I would take the offer over here and I'd move it down 4 strikes. So if I went in here and I sold this binary right here for a $5 risk, and then the market moved down, so I'd go 1, 2, 3, 4, $79.50 right there. That's where the price would be if the market moved down 4 strikes. Then what I can see is that I would be able to go in and make a profit of $15.50 on the trade for a return of 310%, whereas this one's $293 versus $252 versus $285. Now also, of course, when you're combining these together, you can do a straddle or other strategies, and we talk about some of those. And so you could use this to go, okay, if I think it's going to move this far, what's the best binary for me, and what should I take my price at? And so you could go, well, I like this one, and I think it's going to move 4 pips. I also like this one right here. And so that gives me a really low risk. So a risk of $7.50. And with the return potential of $17 on this side and $15.50 on this side. So more than covering my $7.50 risk and allow me to do a straddle based on that move and knowing what price I want to take my take profit in on both the buy side and the sell side. Because on the buy side, I'd put it in 1, 2, 3, 4 strikes. So I'd put it in at 19.50 after I bought and got filled. And then on this side, after I sold at 95, I'd put in a take profit at 1, 2, 3, 4 strikes at 79.50. So I could put a straddle on with an expectation of a move of 4 strikes in either direction. Now, the price ladder is great for as far as when the market moves up or down, what will the binary be priced at within a short period of time. But as time goes on, then that will change the binary as well. And so what you're going to need to do is make sure that if it takes a while for your binary to move as far as you think it's going to move, you may need to go in and check the expected price of 1, 2, 3, 4 strikes away to see if you need to update your take profit orders price. And there's one binary that you can count on regardless of time to expiration of what the price will be. And that's the price of an at-the-money binary. And an at-the-money binary is a binary where the strike is right at or near the price of the underlying market. And if a binary becomes an at-the-money binary, then if you bought the binary and that binary gets to be at the money, so basically that strike becomes the exact same or very close to where the underlying market is, then it can usually be sold at or around $55. Now, if you sold a binary and that strike gets to be at the money, meaning the market moves down and now the strike and the underlying are about the same, that one can usually be bought at or around $45. So what you can see right here is that if the market right now is at 29.28, you could actually go in and look at this right here, and we have a 29.40 and 29.20. So the market literally is trading right in between both of these. And like I said, you could buy this one right around $45. It's at $47 right now. And then you could sell this one right around $55. It's right at $54.50 right now. So these are the at-the-money binaries. Now, as a reminder, the market must move and become what's called in the money at expiration. And basically what you're saying is if you buy the binary and you hold it all the way to expiration, let's say your take profit order doesn't get filled yet, and you hold it to expiration, you are saying that the statement right here is true, which is such as euro dollar will be greater than 1.3140 at 3 o'clock Eastern time. If that's true and you bought it, then you would realize the maximum reward on the trade. If it's false, then you would realize the maximum risk on the trade. Again, you can get out before expiration, which is what I suggest, and that's why I suggest you put take profit orders in for the ideal of the market moves far enough, fast enough for you to be able to get in and take your profit. Now, if you sold it, you're saying that the statement is false. So in this case, let's say it says euro dollar will be greater than 30.20 at 3 o'clock. So by saying that statement is false, or any of these statements if you sell them you're saying is false, then you're saying the euro dollar will be less than or equal to 1.3020. So if this statement is false at expiration, then you'll realize the maximum reward. And if the statement is true at expiration and you sold, you'll realize the maximum risk on the trade. All right, so now let's take a look at an example of what happens with the binary when the price doesn't really move that much and time has passed. So on this example, we're looking at natural gas. And you can see that natural gas at a little before 11 o'clock and all the way over here to 2 o'clock Eastern time, it did move up and down in between, but it's finishing off right about at the same price. So the price rate is 3.696. And so what you can see is that basically 10:45 or so there to 2 o'clock, there really wasn't a change in price from this time to this time. Binary right here was at 3.760, so it was pretty high up there. It's an out-of-the-money binary. And so if you would have went in and you would have bought this binary at the price of around $14 and held it, then you can see how the time ate away and eroded at the binary's value, and right now it's trading at right around $5. So you would definitely want to go back and check and see, do you want to change your take profit price, or maybe if you're wrong about direction, getting out, things like that. No matter what, you know that your risk is capped, but just understand that time will erode, so don't just think by putting a take profit order, if it moves, you'll make the money. You do want to double check it as time goes by and see if the market's moving in the direction you thought it was going to move in at the speed that you thought it was going to move. Now on the flip side, if you would have sold this binary for $14 and time passed by, time would have worked in your favor as the value of the binary is now at $5, so you could buy it back at $5. since natural gas remained basically flat on this out of the money binary. Now this binary here is actually in the money, and we can see that price hasn't changed that much, and we can go over here and go, okay, well, if we bought in right here and the price actually has went up a little bit from where it was previously, because this one is in the money, it's at 3.680, and right now we can see that the market is at 3.695. So the binary actually gained value because it has to get closer and closer. Remember, the binary has to be at 100 or 0 by expiration. So if it's in the money, then it's going to be rising in value. If it's out of the money, it's going to be going down in value. So time has worked in your favor on an in the money binary. And then one more example. This one is very, very close to where the market is currently trading. The market's trading at 3.700, and the strike is 3.720. So again, very close to where the market's currently at. And you can see the price right there is about the same right now, even though time has passed. And now what will happen as this binary approaches expiration, it'll either move up really fast or down really fast as it gets closer and closer to expiration, because it has, again, to be at 0 or 100 at expiration. Always check time along with price, but using the price ladder is one of the most useful things you can do for seeing what do you expect the price to be at if that underlying market moves that distance within a short period of time. All right, so let's go ahead and summarize this down into 3 simple steps. One is you need to have proper expectations on where you expect the underlying market to move. So you could use the diagnostic implied deviation levels that we use. You could use support and resistance, Fibonacci levels, highs and lows, whatever it is that you use, you need to have an expectation. Look on the price ladder to see what would the price be if the market moved to that, and then set your take profit order as soon as you get in. And then as time passes, if it's not moving far enough, fast enough, then you may need to go in and adjust your take profit price as needed. To open a live or demo account today, simply go to www.nadex.com. Also, visit us at apexinvesting.com and learn more about how to trade on Nadex and see the tools and resources that we use to make our trades on the Nadex markets.